Hello guys, welcome to Finding Signals. Today in this video we are going to discuss some of the industries or stocks which could be affected due to the war between Russia and Ukraine. Now as we all know that a war is going on between two countries since last few days, but is the war about to end? The negotiations are going on. So, as an investor, we need to focus on industries or stocks which could be positively impacted due to this war scenario. So, because due to this war, there would be inflation, there would be several industries whose raw materials would be impacted, and there would be inflation over the period of next 1 year. So, in this video, we are going to study some sectors which are going to be affected, and are there some stocks which we could think of buying over the next few months which could give us some positive returns. So one industry, as we all know, is largely affected is oil and gas, as we import lot of oil from Russia. Due to war scenarios, crude oil just skyrocketed, and recently government of India hiked the price for bulk user, but for oil marketing companies it is still a loss situation because retail prices were not increased, and in the last 2 days retail prices were increased by 80 paise, but it was not enough. So oil companies, especially the public oil marketing companies like IOCL and Hindustan Petroleum, Bharat Petroleum, would be negatively impacted, and I would recommend you not to buy these stocks as of now, because these companies, they would have to buy oil and they are not able to pass on the cost to end consumers. So ultimately their margins are going to be reduced. Now, though India is self-sufficient in producing wheat, which means that we are able to produce all the wheat which our country people demand. But due to this war scenario, Russia won't be able to supply wheat to other countries in the world. As a result, the supply would get affected. Demand is still the same, but due to the shortage of supply, other countries would be ready to pay higher price to obtain wheat, and as a result, Indian producers would be attracted towards those higher prices, and it might create a scarcity of wheat in our country, leading to higher prices. And wheat has already increased from rupees 21 to rupees 24 per kg since the outbreak of the war. Another industry, that is the soya feed, which soya feeds are generally used for the feeding purpose of animals, poultry products like poultry farming, because of which the prices of chickens and seafood is also affected. Even the price of milk has been affected. And for the first time, Indian government has agreed to allow import of genetically modified soya meal. One stock which we could think of buying in such a situation is Venkys. Now, Venkys is into the poultry products, FMCG products, soya feed, and Venkys has that goodwill in the market that even if the raw material gets bit expensive, they are able to surpass this cost to the end customers. So this might lead to increase in profit margin and would be beneficial for the company, obviously for the net profit. Another industry largely impacted by the war is the edible oil or the cooking oil industry. Now, in India, 90% of the sunflower oil imported comes from Russia and Ukraine, in which Russia contributes to 70% and Ukraine to 20%. Remaining 10% is from Argentina, and out of the total oil demand, sunflower oil accounts for 10 to 12%. Now, due to this shortage, so even edible oil companies are proposing solution like people to shift to palm oil or groundnut oil, and they are looking for other sources to import edible oil. So one stock which we could think of buying in this scenario is Gujarat Ambuja Exports Limited, which is involved in agro processing business like the maize processing and also the edible oil industry. Also, another stock is Kriti Nutrients, which is again into the edible oil business. Even the logistics are going to be impacted a lot as the fuel prices will increase, and as a result, the dairy industry, FMCG, construction, and heavy engineering industry would also be impacted. Now, when we look at FMCG industry, now recently there was a good decline or correction in the HUL, Hindustan Unilever stock, and when the company management gave a statement that in the coming quarters their margins would be negatively impacted, or there was more downfall in this stock. So according to me, this is a good opportunity to buy stocks like HUL, which could be a good or safe bet in such situation. Another industry is the automobile sector, which would be negatively impacted by the war scenario because the commodity prices has rallied a lot. They have reached to their lifetime high levels. And since the automobile industry is largely depends upon metals like steels, copper, so it is going to increase their cost, and as a result they would have to increase the prices of their vehicles. And even the Russia and Ukraine are a huge supplier of semiconductor industry. Most of the gases, around 90%, sorry, 75% of the gases used in the semiconductor industry, like for etching circuit designs into silicon wafers to create chips, are supplied by the Russia and Ukraine. Already before this war began, there was shortage of semiconductor chips, because of which automobile companies were not able to manufacture vehicle up to their maximum capacity, which would negatively impact their sales. Now due to this war scenario, it would be further negatively impacted. So personally I would recommend not to buy automobile stocks as of now in a present situation, though further if the situation improves, then we can think of entering in those stocks. But also, increase in metal prices is not a losing situation for every industry. Obviously, it is beneficial for the metal industry, the domestic steel sector. So companies like Tata Steel and JSW Steel could have better profit in such situation, and we could think of entering in this stock, because generally in war scenario these commodity stocks, they are bullish. But important thing to keep in mind is placing an SL or deciding an SL before entering in such stocks, because steel industry is cyclical in nature, and once it starts moving downwards, it might come in downward trend, and you might not be able to decide when to exit such stocks. So please decide the SL before entering in the steel stocks. Paint and chemicals industry would also be negatively affected because of the increase in crude oil prices. Now guys, remember, market always runs ahead of us, so it has adjusted according to war scenario. There was a good correction in stocks like Asian Paints and Pidilite. So personally I would think that as these are blue chip stocks, so this is a good opportunity to accumulate such stocks, because these are the leaders of the market. They have the ability to pass on the increased price, the increased cost to their customers. So even if their profit margins gets affected, it is just temporary. They are the giants of the market, and in long run they would surely give the profit to their investors. Diamonds industry is also going to be negatively affected. Now why negatively affected? Because Alrosa, which is the Russia's largest diamond miner, accounts for 30% of the global production of roughs. Now guys, India is not a country where production of rough diamonds takes place. India is known as the country of polishing diamonds. We are known for polishing diamonds. So some of the companies working in jewelry or diamond sector is Web of Gems or Goldium International. But personally, I won't recommend you to buy these stocks on this basis, because this situation would affect or give a positive effect to companies who are in the production of rough diamonds, not the companies which are into the business of selling fashion jewelries. In fact, their margins would be negatively affected, and this would affect their stock price in a negative manner. So personally I would recommend you to avoid these stocks, and we can also see this impact on their stock prices. They have been declining since the war began. Another industry is the pharma industry. Now there might be some loss to Indian pharma companies due to this war, because Indian drug makers export approx 3% of their total export to countries like Russia and Ukraine, which is not a huge percentage. But recently Russian ambassador to India, which is Denis Alipov, said that Indian companies could replace Western manufacturers in the pharma market of Russia. And companies like Dr. Reddy, who are a established player in the generic medicine, and they are also a good distributor in the Russian market. They have the rights to distribute Russia's Sputnik COVID-19 vaccine. Could be a good bet during this situation. Another industry which is going to be affected is the tea industry, because Russia and Ukraine are a good importer of Indian tea. They import approx 18% of the Indian tea, which is our export. So there might be some challenge for the tea manufacturers, the tea leaves manufacturer companies. But one stock which I would recommend you guys to keep on radar is the Tata Consumer Products, because if there is any correction or downfall in this stock, it is a good opportunity to grab on this jam stock. Another industry is the fertilizer industry, because Russia, Ukraine, Belarus contribute to 10 to 12% of India's total fertilizer import. So it is a good opportunity to buy domestic fertilizers players like Deepak Fertilizers, GNFC, which is Gujarat and Narmada Valley Fertilizers and Chemicals, Chambal Fertilizers. So already these fertilizer stocks have rallied quite a bit in the recent time, but if you find any decent entry, you can think of entering in this stock with a limited SL. The last industry which I'm going to discuss in this video is the defense stocks. Some tension is expected in Chinese Sea, especially around Taiwan. So market experts are betting on these defense stocks to perform well. In India, there are some defense stocks which could perform well, and they have in fact been bullish in this war scenario. Some of the stocks are Bharat Dynamics, Bharat Forge, Bharat Electronics, HEL, which is Hindustan Aeronautical Limited, and L&T. So you could think of buying these stocks, but please, it's my humble request, please do not buy these stocks just by listening to the names of the stock. You have to carry on your personal research, study fundamentals, and it is your decision. If you find these stocks attractive, you can think of buying these stocks. One last stock which I think could be a good buy in this scenario is the Tech Mahindra. Now, why Tech Mahindra? It is not related with the war scenario, but generally these type of stocks, these tech stocks or the IT stocks could be a safer bet in such situation. Now, Tech Mahindra is already working in the AI field and metaverse and telecommunication field. So in future, this stock might have a good scope. So if you find this stock at an attractive level, I think you can consider buying this stock. Now guys, this was all from this video. If you found the content helpful, then please do not forget to like the video and subscribe to this YouTube channel. Thank you.